Head straight to the ENCA Money Desk now. Heidi Jaka standing by with an update. Heidi, we'll get to the markets in a moment. I believe we're getting some movement on news around South African Airways.
Most definitely, Tembekile, but we'll get into that in a moment. Let's just take a look at how the markets have been performing today. The local markets still more than 6% down as the fallout from the slumping oil price and coronavirus continues. There are double-digit losers today. The biggest one, that of SAA, which lost half of its market cap. South African companies are bleeding out value. Mining companies, Glencore was down almost 13%, including MTN, and South 32 declined by 11%. The declines were across various sectors, from miners to financial services and retailers. If we take a look at your commodities, if you just look at that oil price now sitting at around $35 a barrel, Russia refused to go along with OPEC's proposal to stabilize the oil price. Saudi Arabia retaliated by launching a price war against its one-time ally. That sent the oil price crashing. And if you take a look at your currencies, the rand hit a 4-year low earlier as global markets sunk. The local currency has been on a roller coaster ride, losing as much as 8% in the early morning trade, nearly touching 17 rand to the dollar mark before bouncing back to below 16 rand to the dollar by midday.
What then are the implications of the stock market crash and as well these oil prices that are on a slide for you and I?
Exactly. It's a very good question, Tembekile. Analysts say it's difficult to determine the actual impact that the markets and currency turmoil will have on consumers. Many heavily invested and wealthier individuals have taken a big knock from today's stock market crash. Sasol shares halved as the JSE headed for its worst day since 2008. With the oil price at record lows, one economist says consumers may get some relief at the pumps.
South Africa is number 3 in the world in terms of the amount of oil we import as a function of GDP. And so it talks to just our reliance on oil importation. And so what happens is that when the oil price is cheap, of course, we expect that that might inform fuel prices. But if we are importing it at a weaker currency, and then we're not quite sure what the ultimate impact will be. But the pace at which the decline happened for the oil price will certainly probably be net positive for South African consumers in terms of what we're going to see at the pumps in the next month.
Finally, to what's likely to be the big breaking story going into the evening, Heidi, and this is a return to talk about retrenchments at South African Airways. Where do we stand tonight?
Most definitely, Tembekile. I think this sets it in stone for SAA employees. South African Airways business rescue practitioners have officially embarked on a retrenchment process. Section 189 notices have been sent to staff. Unions earlier rejected the plan to cut jobs. The rescue practitioners estimate over 4,700 employees are being consulted. The number of jobs that will be saved will be subject to talks. The airline recently went into business rescue with a number of flights grounded at the end of Feb.